Good morning, students. Today we are going to discuss about the types of financial services offered in our country. We know that financial market is the most important market in our country, which decides the economical growth of our country. So each and every work what we are doing, and at the same time how we are going to do all the business activities based on the financial services. So right now, we are the fourth country in the world based on the Indian economy. So we are growing rapidly based on the industries. At the same time, financial solutions. We are providing various commercial services like financial solutions and products. So we know that the Indian financial services industry comprises several segments like mutual funds, pension funds, insurance companies, stock brokers, and wealth managers. We know that the commercial banks, so commercial banks are offering various financial services. In that, first and foremost services banking. So these are all the various types of financial services what we are offering. First thing is banking services, professional advisory, wealth management, mutual funds, insurance, stock market, treasury or debt instruments, tax or audit consulting, capital restructuring, and portfolio management. So these are all the various financial services available in our country. In that we can see one by one. The first one, next one, banking services. So in banking industry we know that the banking industry is actually started in order to create the savings habit among the public. It is a major aim of each and every banking corporation. We know that several banking industrial sectors are now prevailing. Even though we are having public sector, 27 public sector banks and 21 private sector banks also. So what are all the major services rendered by the banking concern? First of all, for the individual banking, so they will be checking the accounts and debit or credit cards for the individual persons. And then coming to the business banking, they will be doing the merchant services. So the banking company will not provide the services only for the individual, but maximum for the corporations, for the merchants. So that is called as merchant services. So whenever they need the finance, they will be providing. At the same time, they will be assisting in providing various loans and some other things. See, checking accounts and savings account for business. So maximum we know that the business people, they will be having their current accounts. So whenever they need fund, they can go and get from the bank, even though they will be getting some additional funds also from the bank. Then coming to the loan section, so right now the bank is rendering various loans like business loans, personal loans, and then home loans, educational loans, automobile loans, and working capital loans. Several loans the banks are providing. For each and every loan, they will get the proper proposal from their customers. So based on the suitability, they will provide they will sanction the loan to their customers. So it is an important thing which is the banking service is rendering. Apart from that, additional services are rendered by the banks based on paying the bills of their customers and purchasing or selling the shares of their customers. So these are all the additional services rendered by the banker. For that they will get some service charge also from the customers. We know that the Reserve Bank of India provides various funds to the banks, which will monitor and maintains the segments, liquidity, capitalization, and financial health of each and every bank. So we know that the Reserve Bank of India will maintain a separate cash reserve ratio for each and every bank. So it is utmost important. So each and every bank, they will be having a cash limit. How much of cash they have to kept in their bank. So it is the limit what the RBI is given. So based on the bank's financial growth, so they will be checking the continuous financial health and development of the banking corporations. Then coming to the second one, professional advisory. So what is professional advisory? So it is nothing but the advisory services rendered by the various financial institutions. For example, we can take the financial advisors. If you want to go and make the investments, if you're having some sufficient funds in your hand, if you want to invest the money in various sources, first of all you will be checking where you can go and invest, which is the safest place to invest our money, and how much of returns will be getting from the investment what we have made. Okay, so it is a important thing. So at that time, so you can't able to take the decision on your own. What you will do, you will go and consult the financial advisors. So they are all the main person. You have to go and contact them. You have to ask which is the safest source of investments, where I can invest, how I can get the returns, how shortly I can get the returns. So this type of professional services rendered by various consultants. So individual services and business services. If you want to do the investments on individual, it is also possible. For the business concerns also, they are providing various services. So like providing advisory, valuation, real estate consulting. It is a huge market, real estate markets. If you want to purchase or sell the lands and buildings, you have to consult one particular person, so which you can't able to go directly and do all those things. Okay, so apart from the risk consulting, so in business the business people will be facing various risk right from the initial stage of business. Okay, so from the starting stage, that is initially at the time of formation of the company. Okay, they have to invest huge amount of funds, and they have to advertise their products, and they have to do various marketing activities, brand building activities in order to promote their products. Okay, apart from that, they have to take a high level risk in order to face their competitors. Okay, so they have to face several competitors, and they have to check about the market risk, what is the current trend, and what type of fashions and changes are happening at day to day. So we can able to access very easily the customers tastes and preferences will not be same. It will be keep on changing from day to day. Okay, so you have to check, or you have to keenly observe the market, what is the actual situation is prevailing, and how you have to take some make some changes in your existing products and services. That is utmost important. So it plays a huge risk. So what happens if you have made the investment, but you are not able to get the returns? Okay, so it will be a huge issue for the business people. Okay, so risk consulting is one of the important factor, and then taxation consulting. It is also the advisory services rendered by the auditing personnels. Okay, so if you want to file the income tax returns, or if you want to try to reduce your taxation, so where you will go? So you may have the auditor in your concerns, but you will go and consult the auditing or taxation consultants. So they are all the person, they will provide the proper advice to you. So what you have to do, and how you have to reduce your taxes, and how you have to pay the taxes promptly. Okay, so these are all the various professional advisory services. It is not only professional advisory, professional financial advisory rendered by the consultants who are dealing in finance. Apart from that, several services are there, but these are all the major advisory services rendered by the business people. Then coming to the third one, wealth management. So here you could have been heard about these things, financial instruments. So the Reserve Bank of India, they having the financial instruments in their hands, like CRR, cash reserve ratio, and how to control the inflation and deflation which is occurring in the economy. So it is utmost important. So here in the financial instruments, first and foremost thing is debt. So if you want to run an organization, so you need some funds. Without sufficient funds, you can't able to run the organization smoothly. Okay, so finance is said to be the lifeblood of business. We know that very well. Okay, at the same time, how we are going to raise the funds, through which sources we are going to raise the funds. Okay, so do you having any idea through which sources you will be raising your funds? Can anyone tell me? Just interact with me. What are all the various sources of raising the funds? Anyone? Yes. Treasury bills. Okay. Any other answer? I am asking about the sources through which source you can raise your funds. For example, if you are planning to start a business concern, you need 10 lakh rupees. For that, what you will do? Where you will go? Yes. So you will be borrowing the funds from the financial institutions. Okay. So it is possible. So you have to borrow the from the financial institutions, and then you can raise your funds through shares and debentures, and then you may have your own funds also. Okay. So these are all the ways you can raise your funds. So that is debt and equity. Then coming to the mutual funds. Do you having any idea about the mutual funds? We know about stock markets, isn't it? So how to purchase the shares and how to sell the shares, how a company will issue the shares to the public. We know that very well. Okay, what is the major difference between these two? That is the share market and the mutual funds. Anybody having any idea? See, in the share market, if you want to, if the company wants to sell the share, if they want to raise the finance, they can sell the shares, okay, or sell the shares to the public. Based on that, they will be purchasing. So this is what. Apart from that, in mutual funds, it is not that if you want to purchase one particular share, it is not possible. So it's a combination of all the shares and debentures. So if you want to get one mutual fund, so there will be several companies' shares will be there. That is, for example, Tata company, Reliance, and then some other topmost company. They will be having the several shares and debentures. So based on the combination, you can sell the shares. That is mutual fund. So what is the major benefit from the mutual fund is you can able to avoid the risks. Okay. So share law, for example, you are going to purchase one particular share. So you may or may not get the dividends. Okay, it is based on the company's growth and development. At the same time, in mutual fund, so you may get loss in one or two companies, but the remaining companies' profit will be you will be having in your hand. Okay, that is there will be the guarantee. You will be having the guarantee of your returns what you are investing. Okay, that is mutual funds. And then insurance products. Several insurance services are rendered by the several insurance concerns. We will be seeing the insurance about separately. And then derivatives. It's a new market. It is called as commodity market. So we can able to say that in the share market, at which time the price of the share will changes, or at which time it will fluctuate. You know what is fluctuations? Ups and downs. The price of the share will be volatiling. We can able to see the price of the share and the value of the gold and the price of the petroleum products. It is keep on changing. Fluctuation is there in the market. Okay. So derivatives is the commodities market. For example, if you want to purchase, you are going to construct the building. At that time, you have to purchase the cements, bricks, iron and steel. Okay. So these are all the commodities what we are going to purchase. So what they will do, they will decide well in advance about the price of the commodities. Okay. So what will be the price of this particular bricks in the next month? They will decide in advance. That is the commodity market. It is also like a share market which you can do the investments. And finally, real estates, what I have said previously. Okay. So this is what. Then coming to the next one is mutual funds. Mutual funds. So I have explained about the mutual funds, but what are all the services they are rendering? Lower risk. So you can't able to completely avoid the risk. 100% risk you can't able to face, but you can able to reduce the risk. There is some difference. Okay. So if you are investing in your money in the mutual funds, So your money will not get lost 100%, but due to some extent, so due to the changes in the market, okay, you can able to avoid some risks. Okay, you can lower your risk, and then tax benefits also. You're having tax benefits while doing the investments in mutual funds, and stable returns. That is the major thing which the mutual fund provides to their customers. Okay, so you will get the returns on a stable way. It is not that, for example, you are investing your money 1 lakh rupees in the mutual fund. So you will not be getting the money doubled within a month or within a year. It is not possible. But you will be getting the returns on stable mode. Okay, regularly you will be getting some returns based on the market conditions. So you can able to notice some advertisements which the sports person and film stars are giving in the televisions. Okay, so mutual fund investments are subject to market risks. So please read the documents carefully before investing. So it is the sentence what will be said in the advertisements. So the mutual fund investments are subject to market risk. Based on the market risk, you may have some, you can able to face some risk. So you, before going to do the investments, you have to read the documents carefully. Okay. So this is the thing what they will be saying in the advertisements. And then fund management, how you have to manage your funds regularly. It is also an important task which is actually required. And then growth in business. So if you want to have a steady growth in business, so based on the funds, mutual funds what you are investing, you can able to expect some important growth in future. Okay. So next one, insurance. So we all know that insurance market plays a major role. So we having several type of insurance. At the same time, several private companies they have been entered into the market. In that first one, general insurance. So what are all the services rendered by the general insurance company? In that first one is health insurance. So each and every person, we can't able to predict the health of the individuals. Okay, anytime anything may happen. At that time, see, the insurance is purely based on the uncertainties. Okay, we can't able to say what is going to happen in future. Okay, for that, we should be on a precaution. We have to take some precautionary measures in order to avoid the risk. Okay, so in general insurance, we are having health insurance. You can able to protect your health, and then fire insurance. So if your company belongs to some inflammable materials like cotton or petrochemical products like that, okay, so you can take the fire insurance, which you can be on a safer side. If any loss happens, you can get the claim. So they will compensate the loss which is going to arise. And then marine insurance. For example, you are a export-import company. You are doing the international business. At that time, so while the goods which you are sent for exports, so due to in heavy ships, at that time, if any accident happens due to some sea perils, so any accident happens if your ship is drawn into the sea, how you can able to avoid the risks? Okay, if you have taken some insurance policy, you can able to avoid the loss. And then automobiles, we know that whatever the insurance we are having for vehicles, okay, if any accident happens, you can get the claim from the third party also. Okay, so it may, these are all the general insurance. Then coming to the life insurance, so each and every person, they require a life insurance policy, because anything may happen in future. So we should be on a secured mode. See, what are all the type of life insurance policies they are providing? Term life. So if you want to take a policy for 15 years, till 15 years to 35 years, you can take the policy. And then money back policy. For example, if you are a person, you need the insurance policy, and you have to get back the money on regular basis. For example, you have taken the policy for 20 years. Listen the class. If you are taking the policy for 20 years, so each and every 5 years you will be getting some amount of money. Okay. So it is called as what? Money back policy. And then unit linked insurance plan. It is called as ULIP. So it is purely based on 50% insurance and 50% investments. Okay. For example, if you're having 2 lakhs in your hand, so 1 lakh you can invest for insurance and another 1 lakh you can take it for the investment purpose. Okay. In insurance company also they are with the type of mutual funds, they are rendering various services. And then pension plans. So what about the age after 60 years? If a person is working from 25 years or 30 years or from 20 years, so what will be the income level of the person after 60 years, after their retirement? For example, they are not going to get the pension. Okay, even though the government has stopped the pension for their employees. Okay, then what about the private employees? They don't have that much of safety and security after the age of retirement. Okay, so while they are taking the pension plans after the age of retirement, they will be getting some amount as a pension, okay, from the insurance company. So this is what. And then coming to the next one, IRDAI, that is the Insurance Regulatory Development Authority of India. So it provides various services to the insurance company. At the same time, for the past 15 years or 20 years, so most of the private insurance company, they have been entered into the field of insurance. You can able to see Tata Life Insurance and then Reliance Insurance. At the same time, Kotak Mahindra, they have entered, and then SBI Mutual Funds, ICICI, like that several company, the private company, they have been entered into the market, and they are playing a major role in the insurance markets. Then coming to the next one, other services. So other services rendered are stock market, that is Securities Exchange Board of India. So if you are a company, so you are going to get the shares or debentures, what you have to do? You have to, your company should be get listed in the share market. Your company enna avanunga? So it should be get listed. It should come under the guidelines, RBI guidelines la kandipa varanum. And then coming to the BSE and NSE, each and every day the share price will be keep on fluctuating. Okay, so the BSE and NSE is Bombay Stock Exchange and National Stock Exchange. So you can able to see each and every price of the goods. Each and every company share will be keep on fluctuating. Okay, so there is a separate thing called as Sensex. In that we can able to see whether the company's Sensex has increased or decreased. We can able to see. And then treasury or debt instruments. So here, bonds and non-convertible debentures. We have talked. We have discussed about the shares. Okay. While coming to the debentures, for example, you are a company. If you want to raise your funds through debentures, also you can raise the funds. Okay. The person, they can provide some loan to the particular company. At the same time, they can get back the interest also. Okay. And then convertible debentures and capital gain bonds. You will be getting some capital gaining bonds also. And then gold saving bonds and tax-free bonds. So these are all the debt instruments or treasury instruments which the company is having. And then coming to the next one is capital restructuring. So initially I have said that to run a company, you have to face several risks, isn't it? So at the same time, so it will be a huge risk for the entrepreneurs in order to run the company in a smooth manner. Okay. At that time, the capital restructuring plays a major role. For example, if a company is getting huge loss, they can't able to run the company due to some situation. So what happens? The company, if the company have received various loans from the banks, if they can't able to repay the loans, what will happen? They will come to the trouble of bankruptcy, isn't it? Then how they are going to overcome those issues? See, volatile markets, whatever the thing which is keep on changing. We know that the price of the shares are keep on increasing or decreasing. What is the major reason for this? It is not only the company's growth and development. It's a worldwide marketing issues. Okay. If there is a war in any other country, it will reflect our share market. It will reflect the price of the shares. It may happen. And then liquidity, takeovers. Yes. For example, if you are a company, you can't able to run the company properly. What you can do? You can sell the company to some other companies. It is called as takeovers. That is, we'll be calling it as absorption. That is, for example, if a B company is going on loss, the A company will take over the B company. It is called as what? Absorption. And you can go for amalgamation also. For example, A company and B company, both the companies facing the same issue. So both the companies can get amalgamated and they can do their business. So it is called as what? Capital restructuring. And finally, the portfolio management. So here it talks about the investments of debt and equity. Okay. So each and every company, they should have a proper debt equity ratio. So based on that, they have to provide the proper financial services to their organizations. Okay. Apart from that, the fund manager, the financial manager is responsible for the whole concern. So we know that whatever the technology they are going to adopt in our country, so which is going to be a best information. For example, there is a small update. On December 3rd, 2022, our Honorable Prime Minister Narendra Modi ji was inaugurated the Infinity Forum on FinTech, that is financial technology. So right now we are the number one in the world for using the monetary finance through technology. That is online trading. Wherever you go, you can make the payments through online. So we are the number one while comparing to some other countries. Okay. So this is what they are saying. They are discussing how to improve the technology and what type of changes we can bring in future. So these are all the points which they are discussed in the particular meeting. And MSME, micro, small and medium enterprises, it plays a major role. So they are contributing nearly 30% of the India's growth. So we can able to see small scale companies. We can able to see SIDCOs in various places. That is Small Industry Development Corporation. It is called as SIDCOs. Okay. So they are rendering various services to the small scale industry or small scale entrepreneurs. So in the total India's GDP, 50% to exports and 30% to the MSME, that is micro and small and medium enterprises. Apart from that, you know that the ongoing pandemic problems, they have forced all the subsectors within the banking and financial services and the industry to innovate. They have to do the innovation. Even though at the time of COVID, so many companies they have been shut down, but they have did their business through online. Okay, that is called as what? Digital transformation. It is utmost important. The digital transformation is utmost important for each and every business concern. Okay, right now with a smartphone you can do whatever you need. You can apply for a loan. You can apply for a eKYC. You can open a bank account. You can order the food. You can order the groceries. Whatever the thing you need, you can able to do the through onlines, through mobile phones. It is okay. It is going on. Okay, like that, several non-banking financial companies like cooperatives, pension fund, mutual fund, and MSME. So they are playing a wide range of customers and they are playing a major role in the market. So these are all the various financial services rendered by the business in our country. Okay, so you have to know, as a commerce with professional accounting students, you should know each and everything. What are all the changes prevailing in our country and what type of technology we are adopting and what type of changes we can take in future and how we have to learn ourselves. Okay, first of all, you have to update yourself. Regularly you have to study the financial news. Then only you can able to update yourself. Okay, so from this we can complete our session. So these are all the final next thing. So thank you for your patience listening. Once again I will discuss in detail about the financial markets in the next class. Thank you, students.